What's going on, everybody? Kevin Cage here with another crypto update. Let's dive right into some recent news. So first up, I actually was on RWA.xyz today and noticing that the distributed asset value for the XRP Ledger is over $400 million, and we saw over 54% in the past 30 days. So scrolling down, I was just kind of taking a look, and maybe they already covered this on Twitter, but we can see that Control Alt had the biggest jump, up to 287 million, 144% growth. So I typed in Control Alt initially, and then I saw that Control Alt had a blog post, but I wasn't able to pull it up, so then I pulled this article up that was put out by FinTech Times. And unfortunately, this website doesn't let me control Zoom, so let me just show you what I posted on Twitter. So we have Bulletin Diamond and Control Alt pioneer UAE commodity tokenization with $280 million Diamond Initiative. So we can see that Control Alt with Bulletin Diamond tokenized over 1 billion AED or $280 million worth of certified polished diamonds in the UAE. And note down below, bringing gems on chain, the tokens are minted on the XRP Ledger. Now when I actually go back and I try to click the Control Alt press release or this blog post right here, it actually doesn't pull anything up. We know that Ripple's partnered with them. I'll pull up what they're working on as well. That came out, I believe, in like May or June of 2025. But when I go to, let's see, blogs or press releases, I don't see it put out just yet. So maybe they're working on it. Because we know the original one back here. So here's July of 2025, Ripple partnering with Control Alt to support real estate tokenization in Dubai. And we can see that this partnership sees Control Alt using Ripple's institutional-grade digital custody technology to support the DLD, which is the Dubai Land Department. So they're pioneering a real estate tokenization project, and we can see tokenizing real estate title deeds in Dubai being issued on the XRP Ledger. So that's definitely interesting, considering all the other things we know that Control Alt has been working on over the past year or two. So we can see Control Alt exploring tokenization in the Bank of England's digital security sandbox. We have Control Alt securing their VAR license last year. We have a few weeks back right here, nearly a $500 billion tokenization opportunity across the GCC by 2030. So they're discussing this tokenization opportunity across the GCC or the Gulf Cooperation Council. And even just 3 days ago right here with Bank of England. So we can see that Control Alt, a tokenization provider for digital capital markets, announced that it's been approved to participate in the Bank of England Synchronization Lab program, discussing financial stability and synchronization capabilities of the renewed RTGS or real-time gross settlement service. And keep in mind, right on their website, we have Ripple right there. And if we go into Control Alt on RWA.xyz, we can get a bit more insight. So we can see the XRP Ledger has most of the value. We have more on Mantra, and then some on Solana. And as we scroll down looking at assets, we can see the Diamond AD Collection 1, SD Collection, L Collection, all tokenized on the XRP Ledger. And friendly reminder, guys, believe whatever you want. This is not financial advice, but Bitcoin dominance has yet to crash. That is what I consider Altseason, when Bitcoin dominance crashes and Bitcoin is making higher highs. And just remember, just because it hasn't happened yet, doesn't mean that it won't. We can make the argument that the cycle's broken, Bitcoin's going to be creating another multi-year bear market. Why I actually disagree, and I believe that the unexpected is going to happen, is because it doesn't make sense for us to go into a multi-year bear market right now. That's just my intuition, my logic, and yes, my bias. I think the most sense is for Bitcoin to end up doing a V-shaped recovery like we've seen with the S&P 500 and gold, which is another risk-on asset. I think it's in the best interest of institutions to see another cycle bull run, another alt season, sucker a bunch of people in with good prices going up and pumping, people make some easy money, and then they dump on us. I think institutions and a lot of these algorithms would make a lot more money by just doing a crazy V-up, a blow off top of Bitcoin to be 150 to 250k, see an alt season during that time before or after, and then a multi-year bear market, if we are going to see the same cycles play out that we have in the past. Maybe the cycles are broken and we're going to see a very different structure. Because realistically, if we go into a multi-year bear market right now, I think a lot of retail would kind of just leave and not pay attention, and then the liquidity from the market would be gone. So I think it's in the best interest of these whales to eventually pump the price. Maybe it's not as simple as looking at the past cycles anymore, but I believe that pumping price brings liquidity, brings hype, brings opportunity, and then they can dump on us after they move the prices up. So that's just my opinion. But I'm telling you, Bitcoin dominance has not crashed. We haven't missed alt season, it just hasn't happened. One crash and it's game on. provided that Bitcoin is making higher highs. We can look at the gold fractal, a giant cup and handle pattern in this handle, ranging, crashing, V up, another pullback, and then boom. Even the Russell, or the small cap index, has been recovering and doing a strong V up into new all-time highs. Even the S&P 500, so no matter how you look at it, and keep in mind this is on the monthly time frame, we've seen a variety of assets or indices trending up. Now, could we go into a multi-year bear market? Yes, and right or wrong, I don't believe that's the case. I don't know where the bottom is, but I believe that we do a V up at some points into new highs. Similar to what we saw the S&P 500 do, a giant crash and then a V up. Alright, next up, so we had this news just come out today. We have a new Hedera Council member, which is FedEx. So great to see, powering the next generation of global supply chains. So now when we go to HederaCouncil.org, we can see FedEx added to the council. So FedEx has joined the council to help advance trusted digital infrastructure that can support the evolving life cycle of global shipments and make supply chains smarter for everyone, enabling global commerce to operate increasingly at the speed of data rather than the speed of paper or physical checkpoints. As supply chains become more digitally integrated, trusted data infrastructure is expected to play a growing role in supporting automation, enhanced digital visibility, and continuous compliance, especially considering the need for strong governance and risk controls across complex international trade environments. So I'm very excited to see what FedEx, along with the rest of the Hedera Council members, are going to be working on, because the most important thing to have are active council members. It's all about digitally native supply chains, and FedEx will be operating a node on Hedera. And yes, they're a big company. We can see $90 billion in annual revenue, with over 500,000 employees. Alright, next up, if you guys haven't seen this just came out yesterday, so the XRP Ledger upgrading its settlement layer. So this was shared by RippleX Dev, and we can see token escrow XLS85 is now live on the XRP Ledger mainnet. So originally, the XRP Ledger always had native escrow for XRP itself, and that meant that you could lock XRP up with time conditions and release conditions. So it was natively super simple on the protocol level. But now we have this functionality extending beyond just XRP to all IOUs and MPTs. And these IOUs are trust line-based tokens, so think of them as fungible assets, so they could represent debts owned by an issuer. They can be traded right on the XRP Ledger DEX, but they are dependent on the issuer. And then we had one of the more recent or newer token standards on the XRP Ledger, MPT, standing for multi-purpose tokens. So these are native to the XRPL, and they're more so designed for tokenizing RWAs, real-world assets, like bonds, stablecoins, loyalty points, airline credits, you get it. So MPTs have native functionality. They're built right into the protocol of the XRP Ledger, so there's no need for super complicated smart contracts. And what's nice about MPTs is, from a regulatory compliance standpoint, there is authorization, so they can restrict who holds tokens, they can freeze, claw back, and this makes it really ideal to use MPTs for institutions. Now keep in mind, every time you say freeze or claw back, people think that can happen to XRP. It can't. This is to get real-world adoption for RWAs using MPTs. So this is a really good thing. It's not just XRP now, it's just allowing IOUs, MPTs, everything on the XRP Ledger, a big toolbox for institutional DeFi. So allowing token escrow for IOUs, MPTs, stablecoins, you name it. The XRP Ledger now supports secure, conditional, on-chain settlement for all assets. Treasury management, conditional grant distributions, team vesting release schedules, decentralized marketplaces, even digital rights and RWAs, including content unlocks and license releases. And at least in my experience, over the past few years, maybe the sentiment is shifting and people are starting to believe in the XRP Ledger's ability to tokenize assets. Do not sleep on them, because they are setting one hell of a foundation. They were one of the first networks to offer native tokenization years ago, maybe in 2013, and just looking at the RWA League Table for RWAs globally right now, when we look at represented, we can see the XRP Ledger's in the number 4 spot. When we click distributed, we can see the XRP Ledger is down here at number 9, still in the top 10. And when we go to all, we can see the XRP Ledger is in the number 6 spot in the RWA League Table. It's in a great spot for the future of tokenization, considering all of the estimates. And it doesn't hurt that Ripple, the company, was last valued at $40 billion as well. Alright, let's dive into some fun stuff. So let's discuss retirement and how much funds do you actually need in your investment portfolio to be able to live off the interest. So let's dive into what's known as the 4% rule. So basically the 4% rule says that you can withdraw 4% per year from your investment portfolio and your money's likely going to last another 3 decades or 30 plus years. So following that math, let's just say that we want to make, during retirement years, when we're not working, we're not contributing any more money, we want to make $100,000 per year. So we take $100,000 divided by 0.04, which is 4%, and we would realize that we need an investment portfolio of $2.5 million. Now, this is all based on using a Roth IRA for tax-free growth. You're 59 and a half. You can withdraw everything at any time, and there are no required minimum distributions, so you can actually keep letting this money grow. And this is assuming that you're investing it into some popular index fund like the S&P 500 or Fidelity's Total Market Index Fund or even VTI, because all of these returns historically average 7 to 10% per year. So they're valuable because they're tried and true. So for everybody out there with a Roth IRA at Fidelity, Vanguard, hats off, because you're a genius. There are so many Americans or United States citizens that are sleeping on Roth IRAs. And I want you to consider the value add in running 2 Roth IRAs, one in an index fund and then one with iTrustCapital. You have something in Vanguard or Fidelity, it's just an index fund, you're doing 8 to 10% per year on average. This is capital preservation in the compounding engine. And crypto is the asymmetric bet. So for example, let's just measure from the 2022 low for this Vanguard one, and we can do the same thing with any other fund, but we can see about 90% where it's at today. I'll even remeasure it from wick to wick, so about 96%. If we do the same thing looking at Bitcoin, we can see from that 2022 low right there up to the high, we'll even just go to current price, 338%. So the returns are running laps around these index funds. But the crypto asset class is way more volatile. I mean, you can see 75% drops before a 3x. So crypto is the asymmetric bet for really big returns potentially or losing your funds, and then this is the capital preservation and compounding engine, using an index fund that's tried and true. So imagine you have 2 Roth IRAs, one with Fidelity and one with iTrustCapital, and with iTrustCapital you have 90 plus different assets, you have gold and silver, you can trade 24/7, 365. If you're using Fidelity or Vanguard, you are stuck trading during market hours. But owning an index fund like Fidelity's Total Market or VTI, you're essentially owning the entire United States stock market. And that's historically returned about 8 to 10% per year. Not every year, but over the decades. So that's stable, it's diversified, it's low cost. And I don't know about you, but I'm not retiring for another 30 years, so I want some high flyers in my portfolio. And that's exactly why I run 2 Roth IRAs. With iTrustCapital, I have excitement, I have a variety of options and assets, I can stake, I can hold the US dollar directly, I can even earn yield on USTC. And who's to say in the future, as the crypto space matures, that we're not going to see very popular indexes that are tradable via spot. Because we know the crypto asset class is $2.3 trillion for the entire space, and Bitcoin is at $1.3 trillion. But looking at a variety of companies and ETFs, I mean, ETFs are $13 trillion and companies are over $140 trillion. So the global equities market, stock market, is valued at over $100 trillion, and crypto's at 2. So yes, I believe that there is potential for crypto to go to 5, 10, 20, 50 trillion. And the name of the game is compounding. So if you make life-changing wealth in your Roth IRA with iTrustCapital, you have flexibility. You can actually transfer some of that or all of that into Fidelity, Vanguard later on. And you can keep crypto exposure for life, but let's just say that XRP or Ethereum or SWI, something took off and you wanted to take 20, 30% off the table. You could hold it into USD and just keep it on iTrust and wait to buy back. Or you could say, you know what, that's an awesome win, let me take a portion of that and roll it over into my Fidelity Roth IRA and just let that compound for 8% per year safely. So let's say that you take $400,000 from your crypto IRA and then roll it over into a custodian like Fidelity where you already have a Roth IRA there. So let's say you have 2 Roth IRAs, you already had your Fidelity one and you created a Roth IRA on iTrustCapital. Your Roth IRA on iTrustCapital in the next 5 years explodes, and you have a $500,000 portfolio on iTrust, and you decide, you know what, bear market might be coming, let's take some profits. You can hold in the US dollar, or you can actually withdraw some of it and go into Fidelity as the safe compounding engine. So you take $400,000 off, you leave $100K in the crypto space, and then you move that over to Fidelity and some boring index fund. And if you have 30 years up until retirement, you're making 8% per year in terms of your return, and it's compounding annually, you are looking at $4 million by the age of retirement. Now, I can change this to monthly. I don't really think it changes the figure too much. There's huge opportunity to have both and run a crypto Roth IRA and then run one in a boring index fund. Now, if you're already older and you don't have one in an index fund, I mean, it's up to you to decide. But for crypto, it is asymmetric. It's high risk, high reward. And even if I were 50 years old, I would be creating a Roth IRA on iTrustCapital. If I'm not comfortable with the current market, I can actually just be ready, have it funded, and just sit in USD and wait for an opportunity. But anyways, guys, I know that was a lot of information. Be sure to check out iTrustCapital linked in the top of the YouTube video description. It is also the top link in my link tree. I've been with them for 6 years now, and yes, when we actually see a bull run, it will be very nice. I love the flexibility, and I know that there's going to be a lot more products in the future. Because this space is growing, we have the Clarity Act coming, we have the Genius Act, and we are likely going to see regulations for RWAs as well. So I hope you enjoyed today's video, hit that like button, and I will catch you in the next one, because we have a bunch of news to go over. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.